following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin.
And I got Lou from Fairfield, Connecticut, man. How you doing, Lou?
I'm doing good, Darrell. And I got to tell you, you're not just blowing hot air out there. I think the way you look at the market is terrific. You're a nice guy as far as over the TV. All the research you do, all the homework you do, I truly appreciate it. I appreciate your view of the market. It's awesome.
I appreciate that. Thank you very much.
Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Darrell Martin.
All righty, folks. Welcome back here to the Diagnostic Trading Hour. I'm your host, Darrell Martin, right here on TFNN.com, coming to you live at Tiger TV, also live inside the eSignal platform, streaming to you right inside there, and on your mobile phone at TFNN.mobi. Let's check out where the markets are at right now. We have the S&P is up 10.5 points right now, but we've had some pretty big moves going on. It was up at 2034 right now, so it's backed off a little bit on that. We got the Russell up 11.5. We got Nasdaq is actually slightly in negative territory at the moment, down 2 points. So definitely doing some pullbacks. We got the Dow is up 156, but it was up quite a bit more than that, up about another 40, 50 points on top of that, over 200 points a little bit earlier. But still in positive territory, but Nasdaq starting to push that negative territory, leading the way there. Looking on over at copper. Copper right now, we got copper is currently up 3.5%. And we have gold is currently down 1.5%. Silver pretty flat on the day, up just 0.08%. So some big moves in commodities overall. Silver a little bit quieter, at least from, looking at just the settlement price. That doesn't necessarily tell the whole story without looking at the chart and all the activity in between. We have natural gas right now, which is up 0.084%. Like I said, silver now 0.02%. So still pretty flat there. We'll get on at natural gas, though. Natural gas is moving big, up 3%. We got oil is moving massively up 5% today, up 250 ticks already. And, just barely off its highs right there at 52.23, at 52.12 right now. 5% up, so some big moves in our energies. We'll get on over at the ag sector. Ag sector's moving up 4% in corn, 16 points, up 3% in soybeans, 30 points up in soybeans right now. So some massive moves. I mean, today is a day built for trading with all these massive moves going on. We got the pound dollar up 136 pips. I mean, it doesn't matter if it's an indice, a metal, an ag, energy, or FX. They're all moving big right now. We got pound is up 136 pips. We got the euro dollar up 148. Euro pound up 23 pips. We got the dollar franc right now up down 57 pips on the day. Dollar getting hammered a little bit right there. And dollar index also getting hammered overall. Dollar yen is down 22. Euro yen is up 136. We got the Aussie yen Aussie yen down 57. Aussie dollar is down 10. And that's actually pretty good compared to where it was at. And I actually went short about half an hour before the Aussie dollar interest rate last night, using some binaries just to be safe. Put on, I want to say it was about $10 at risk. Maybe I can find those trades here for you in a minute. But shorted 50 contracts, made like $3 or $4 grand on the trade, risking like $350. And basically just, was reading a bunch of reports. There's a lot of analysts saying that they expected that the Aussies would be dropping at their interest rate. And, so I had some trades on, a couple different things. But the nice one was the one that I pulled off, like I said, 30 minutes before that. And just looking for that drop. I even had a couple on the long side hedging just in case I was wrong, and it popped up, but it flew down really, really far. Looking on over at the bonds right now, we got the bonds are certainly in negative territory, down 0.75%. We got the dollar index down over 1% on the day, and a couple more currency pairs for you there. We got pound yen is up 111 pips, euro franc up 83. Pound franc down just 20 pips on the day. All right, well, that gets us caught up. Like I said on the news yesterday, the one thing we had was the Aussie dollar, and I mentioned this even on my Thursday show for you, was to watch out for this. And that was last night. I was looking on over, and that cash rate statement. And again, a lot of the statements I was reading, Barclays is putting out that they think they're dropping the rate. And just looking at how long it's been since they dropped the rate, looking at the CPI numbers, the inflation, everything else, shouldn't impact their decision to go ahead and lower it on down. And they did. They dropped it from 2.5 down to 2.25. So, they had the building improvements and trade balance, not a big deal there, but everything, all eyes were on the cash rate statement as that came crashing on down for us. Let's see here. We also got a few other, stories coming out in the headlines right now. The dollar slipping down on the euro, a lot short covering and bounces, and, a lot of Greek relief happening in that process. So that's a little bit of that euro bounce happening and going on. Gold continuing to slide down a little bit with the as the Greek fears go down. Let's see, Wall Street gaining on the Greek hopes, that there'll be a great Greek bailout yet again. Like, I'm sort of sick of hearing about it. But anyway, so it ran a whole bunch of stops, popped on up. You can see stories everywhere about it. And they're putting it all on Greece. So I think a lot more of that is about what happened with Australia changing their rates. But I think, part of it does have to do with the Greek thing as well. But anyway, so let's see, Australia getting weaker, dollar would get a little bit stronger, but then dollar got weaker as people poured out of that and back into markets. And, the tangled web gets wrapped up sometimes and a little bit tied up in knots. And let's see, what do we got? Oil prices continue to rally on solid manufacturing figures. So getting some good manufacturing, of course, that helps out with oil prices as well. Now, we had Google earnings last week. That was something I talked about. I want to go over that with you one more time just in case you missed it. We went in and talked about putting a straddle on the trade, a strangle on the trade. And if we go over and we look at, let me pull up this side by side for you. This is just one of those things, like, if you'll remember it, you can use it, next time around, even if you didn't get it this time around. And so we go over here. We're going to pull up Google side by side with NASDAQ. And this is really, there's a lot of them out there. This is really the one that I focus on. So I don't really put a lot of attention into trading the other earnings reports. Facebook is one I'm starting to look at, but I don't put a whole lot of attention on the Google earnings reports. So, the reports other than Google earnings right now. And let's see here. They had their call there on the 29th. So if we go over here, right there, look at that. Just a massive move after hours. But the only move we really care about here is going to be these first 15 minutes, because that's all that you really get to play. Okay? So go in here and just highlight the first 15 minutes, because that's when everything shuts down. And if we go on over here to the 29th, right there. Again, same thing. Those really those first 15 minutes after the market closes. And then I got to turn off. I'll go here to my style, and we'll go to our settings, futures, and tell it to show us the extended hours. All right. And let me back it back up over here. Then let's go back over here to the 29th, where earnings came on out. And looking at the NASDAQ and how big of a move we got. Now, what was really interesting, and everybody who really did this played along, basically, where I talked about it on the show last week, they got in. And Google, it came in, and it rose about 6 points into the close. And then right there on the close, on the 29th there, what it did was it came way down. It dropped from 510 down to 485. So we got about a 25-point drop in Google in that first few minutes there, and finalizing out the last, 15 minutes there, it popped up to about 500 for about a 10-point drop overall. NASDAQ, now remember, Amazon was happening at the exact same time. So we may have to go over, pull that one up, because that can sway the results. But what's funny is we didn't even get to the play. So this is what you'll find out if you were watching this trade. Amazon barely had any movement there. Let's see. Let's move it over. Here we go. Okay, there's their Amazon. I was like, wait, I know we had a movement on Amazon. Okay, so yeah, it popped on up. It went from 310, and by the 4:15 Eastern time, it popped up about 25 points. So you got a nice move on Amazon out of the trade. Now Google went down, Amazon went up. That sort of stunted the actual move in the NASDAQ after it came on out. So if I go over here and try to grab just that amount of time, right about there. I mean, we didn't really get a massive NASDAQ after close pop. Usually we get a pretty big pop. We didn't get a massive pop. But here's what happened. We hopped in at noon. I was talking about that one trade. I'm like, there's this one strangle right here. And I was like, if we wait, we may not even get to it. We got the move before the earnings announcement even came out. So our move was to do a strangle on the binary contracts. And I've done this enough now. I've realized there was a lot of times where if you wait until the news is about to come out, then there are not any strikes to even do a strangle on. Well, in this case, if you would have waited, there wouldn't have been any strikes, but also the movement was already, done. And so we hopped in on that right there between 12 and 1 when it was starting to move up. It was starting to move up in the show at the beginning. I talked about it, and then it started to move up. And I had several traders email me, and say, hey, man, I took that trade, and I was out. I took my profit before we ever even got to the earnings announcement. And so they were out of it right about here. And I mean, because that's a 40-point move on the NASDAQ. And so they took their profit well before the earnings announcement even came out, which is awesome. And I've had that happen a couple times. Most of the time I go into the earnings announcement and then I get the big move. But if I wait, I found that, and I was looking to hopefully put another position on, but it already moved so far. There was, that profit was already taken to see if anything else would come up, but there was no additional strikes. But for the price that I wanted, which is good because it really didn't pop that much afterwards. But man, did we ever get a great move leading right into earnings and entering that right between 1 and 2 Eastern, 12 and 1 at Central Time, and that popped on up. And if you followed that trade along there, you were profitable. So that's from last Thursday. We talked about that. And again, to remind you, a strangle is pretty simple. All it is going in, and it's entering a binary above, like buying, like say a 41, 70. And selling a binary below, so selling, say, a 4110. And at the same time, and if it pops up or pops down, far enough to either one, you can be profitable by taking profit off when it's hit and even leaving some on to keep going. In either case, you would have been able to grab some profit on that. All right, stay right there. We'll be back right after this break.
Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Check out the new look of Tiger TV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of Tiger TV, then visit TFNN.com. Darrell takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Oh, sorry about that. Had a little mic issue. So just wrapping up what we had on a Google earnings trade from last week. And let's see what news we got going this week that we need to be aware of. And let me pull that up. All right. So pulling up the calendar. And we're going to check out all the pending news. So again, it's always, like I said, super important. Like if you were trading Aussie last night and you didn't know that Aussie had its announcement coming out, then you got slammed really hard. And it's, be aware when the bus is about to pass in front of you. And that is the bus right there on the Aussie. So like I said, some just massive, massive moves. And look at that full recovery. I mean, it ran down and then right back up. Absolutely amazing to see it do that after they cut their interest rate. I mean, it dropped down and it still flew back up. So just some massive moves. But if you were in here, I mean, you were stopped out. Okay, unless you're using something like a defined risk contract, like a binary spread on Nadex. But I mean, this thing went from 78.10 down to 76.26. Basically, nearly a 200 pip drop. And I mean, it was like lightning. there. I mean, just flew right down. And so, you want to know when those things are happening. It did a full retrace. I would not expect a whole lot more at the moment. So, okay. Anyways, let's get back on track. Get back on the current news that's going on. And what we have on our news trading plan for this week, as I get it all opened up for us. Okay. Right over here on February, what are we on? The 3rd today. And some of the news we had coming out tonight. We got earnings coming out. We'll be looking at Disney and it looks like Gilead are on the list. So coming out at 4 o'clock, Walt Disney will be releasing its earnings. Probably doing well with all of the Frozen sales and everything else that keep going on. I mean, I even go to the skating rink with my daughter this weekend, and they have Frozen playing like on the wall in the background. My church did a big Christmas musical, and it literally had a ton of the Frozen stuff. And I was like, wow, is this legal? And they bought all the rights, to be able to put all the stuff in there and everything. And I mean, that thing is everywhere. And so that just continues, I'm sure, to add on. They have that new ride going up as well. So built on Frozen. So they're just building that empire up. And they have a lot of other movies coming out that have been doing well. So anyways, but looking at Disney will be coming out at 4 o'clock. And that'll be impacting the Dow. We got Gilead coming out at 4:05, impacting the NASDAQ. Let's see. What else do we have on the roster for today? New Zealand will be releasing their employment change. That can affect some Aussie traders right there around 4:45, and, of course, New Zealand dollar traders. The governor of New Zealand is going to be New Zealand RBNZ governor. Their Fed head governor going to be speaking at 6. The average cash earnings on the yen is going to be released at 8:30. Shouldn't be a massive impact, but it will, throw things off a little bit for a few minutes. Then China will have its HSBC at 8:45. That can definitely impact the Aussie and the yen, so be aware of that one at 8:45. And then for tonight, we got the pound dollar. Looking at a potential iron condor on that one for 11 p.m. to 7 a.m. Looking at a 35 pip move or less. So looking for a $35 minimum profit between your two spreads. Your bought spread below the market, your sold spread above the market. And we got a euro-dollar retail sales report coming out. Usually a pretty flat report. $25 on that one, looking for 25 pips. That's, again, buying a Nadex spread below the market, selling a Nadex spread above the market. If you don't have a Nadex account yet, hop on over to nadex.com. I trade on here each and every day. And but hop on over here, and if you forget that, you can always go to TFNN.com, and there's a Nadex banner on the right side of that page. Just click on that; it'll take you right there to Nadex. And to get your demo account going, go to demo trading platform, and then from there, you can put in your username, first name, last name, phone number, and email address. Okay. So username, first name, last name, and email address. And then what they'll do is they'll email you a password, and you can get started on that one. All right, we'll stay right there. We'll talk about how to get a live account and get that demo extended out so it doesn't just expire on you in 2 weeks. We'll be right back after this break.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Alrighty, folks, we're going back here to the Diagnostic Trading Hour. And let's check out where we're going in. We're talking about how to get a Nadex account so you can check out these iron condors and these straddles and these strangles that I'm talking to you about. Hop on over to TFNN.com, click on the Nadex banner on the right side of the page. That'll take you directly to Nadex. When you're at the Nadex Exchange, the North American Derivative Exchange, located in Chicago, all your funds are held separately. It's regulated by the CFTC, same body that regulates the CME. And they're not trading against you. They are simply an exchange helping fill orders, ensuring, not fill orders, but actually helping ensure the fulfillment of orders between buyers and sellers on both sides. They make sure that both sides' capital are put up front. Therefore, there's not a risk of a broker going into default negative because all the money has been put up on both sides, the max risk. And so you also never get a margin call and don't have to worry about the other guy getting a margin call so the broker can pay you, because they're not a broker. They're an exchange, and they require all margin risk up front. So, which could be $10, can be $10,000. It depends on the size of your trade. If we go on over to trading, we go to demo trading platform. Like I said, you can fill out that username, first name, last name, phone number, and email address. But what happens after you get it? Well, you're going to get $25,000 of live funny money you can play with, but it only lasts for a few weeks. What if you want to get that extended? Hop on over, click on open an account for free. If you open a live account, if you fund it with $100 or more, obviously when you're going to start trading, you're going to want more than $100, but to get it going at $100 or more and one live trade or more, okay? And that live trade could be a $3 risk trade. It could be a $3,000 risk trade. Doesn't matter. Doesn't matter if you open with $100 or $100,000. As long as you open a live account, fund it with $100 or more and place at least one live trade or more, then you can call them or email them at customerservice@nadex.com. Their number is at the bottom of the website, 877-77-NADEX. You can call them up and ask them to extend your demo, and they'll extend it out for a year. Why would you want a demo for a year? Well, because hopefully you're trading live much sooner than that, hopefully within a couple weeks. But you ought to be trying new ideas, learning, growing. These are options, okay? So as you're learning different ways, as I teach you different ways here on the show, when you check out webinar recordings, all that stuff that we have, we do those every Monday for Nadex. So as you check all those out, you learn more new things, then you can go in and you can test them out in demo. That's the nice, cheap teacher versus the expensive teacher of the live markets. Part of it's just learning the muscle memory. Okay, when this happens, I go here, I click here. When this happens, I go here, I click here. And just getting that down where it's very easy to do. And if we do that, we hop on over here and get that set up. You can also go over and check out the scanner right there. We got the spread and the binary scanner, both available for you. You can check those out for free, and has tutorials on how to trade binaries, how to trade spreads, how to use the scanners, and that'll get you going right there. Now, let's get back on to the topic where we were going into, and we were looking at the news for the day and the week to make sure you're prepared. All right, so on the news for the week, we talked about, today, earnings after the market, the cash market closes, but before the indices close out, they close out at 415 there, and those announcements come out at 4 and 405, like I mentioned. We talked about the pound services PMI, and we talked about the Euro PMI. Tomorrow, what do we got going on? Pound Halifax coming out at 3 a.m. Shouldn't be a massive market mover, but it's just one to be aware of if you're trading at that time. European, Spanish, and Italian services PMI. The earnings releases, Merck will be coming out in the morning at 6:30 a.m., obviously impacting the Dow. Other reports we got coming out this week. We got the ADP NFP. So starting off the month of February with a bang. ADP NFP coming on out, being released at 8:15. And potential. Usually the average move on the euro dollar is about 30 pips. On this, it's usually not the biggest mover. It'll start becoming a little bit more important as we get closer and closer to people thinking they may raise interest rates. If those numbers are, worse than expected, then that's, will cost one thing. If they're a lot better than expected, then it means, the market's probably going to, Yellen's probably going to raise the interest rates earlier, like in September. So people will be paying a lot of attention to that. Going on, and we got CAD IV PMI. And that comes out, at 10 a.m. We have a 9 to 11 expectation of 35 pips of movement on the dollar CAD. So you can do an iron condor, buying the lower spread, selling the upper spread for a $35 minimum combined profit. And let's see here, going on down to the ISM coming on out. And that one's going to be released at 10 o'clock. And so looking for a 9 to 11 on that one, 25 pips. That's trading the euro dollar. Doing an iron condor on that one. So that gives you basically several lined up with the NFP, the CAD IV PMI, and the US ISM that you can take advantage of. Don't forget, we have US oil inventories coming on out. So you want to look at the expected ranges, how much is the movement that it's expected and built in, and look at the IV in the market. Maybe it's a good straddle, or iron condor, or butterfly. You just got to look at what the prices are. But lots of different ways to trade the oil inventory report. We got the Aussie retail sales report coming out. Again, be careful on that one. If it looks like it's too, it's not going to work out, then you can always go over to a straddle if it's really cheap. But also be aware that, may set up for a great potential iron condor. I expect it will probably be a little bit more volatile this week. So putting a little asterisk on this one for you. Probably a little more volatile this week since Australia changed their interest rates. Okay. So I'm going to put a note for myself to add that on there. And let's see here. So maybe more volatile than usual due to Australia changing interest rates. There we go. All right. All right, now we got that one up, and that'll wrap up Wednesday. We'll come back on Thursday here in a second. We got James from Florida calling in. How you doing, James?
Good, good. Listen, last week on, I think, a Friday in the morning, you were talking with Tom about, you used the expression, you have the deviation point, correct?
Yeah, I use deviation levels. I use them based on implied volatility, which
and
is
today,
expected.
Is there anything, implied volatility, is there anything indicating, or is this something that you use at the opening, or does it go for hour after hour, you change, you minimize, and go to another deviation?
Well, it's a deviation based on the day's settlement, so it's a one-day deviation move. So actually, I plot them at 8:30 at night. I wait for all the markets to open, all the options to open back up, and then pull the implied volatility out, and they're actually good for the entire day. So they don't, basically, it's how far does the market expect the market to move that day?
Well, tell me, please, like something today. What did your charting last night and working on it? Where did you come up with? What figure did you use for today? I'm just curious on the ES Mini.
On the ES Minis? Okay, let me. Well, I got them right here on the S&P. We're looking at a one deviation move being 25 points for the day. So that would have been a move up to right here. So if we go down and on the S&P, up to 2042.5, and then down to 1991.5 would be a one deviation move down. So let me pull up the S&P and I'll show it to you on the chart exactly how it comes out.
Are you using the SPX or the E-mini? I'm sorry.
I'm using the E-mini. So
okay.
Yeah. So on the E-mini option, we were looking at 2042.5 would be a one deviation move. However, last night we pulled back off of that settlement. Okay. So we pulled back down a little bit. And so I look at two things. I look at one, like how big of an expected move do we have? And so to show you, I don't know if you're watching here on Tiger TV, I have up the S&P E-minis. And what I say is the expected move is 25.5 points from high to low.
Darrell, there's nothing up on here.
Okay. So about 25.5 points. I don't know, maybe the radio operator doesn't have it up and showing or something. But the S&P is 25.5 points. Okay? So from basically however low it goes to however high it goes. I'll even rebroadcast the screen. Maybe he'll put it up there. And we'll see. We'll come back to it. But let's see. Let me open up.
Those are your figures from based on the 4 o'clock close or the 4:15 close?
That's based on the 4:15 official CME settlement price.
Okay.
So today, right there. So 25.5. So basically from 2017, which was the settlement price of the CME. That's where that price comes from.
Oh, I'm sorry. You said 25 points. Your deviation.
Right. 25.5 points is a one deviation move. And it basically moved 25.5 points from the low to the high today.
Okay. I'm trying to quickly figure it. I don't know what we closed at. But we just reached the ES Mini high at 2035.75.
Right. We had a low of 2006.75, looks like. 2007.5. We get right in there. Yeah. I'm usually using Ninja, but pulling this up. So we got 2007. Okay, 2007 is our low today. Since
really?
The market
Wait a minute,
closed.
I didn't see 2007.
Are you looking at the after hours also? You got to look at it since 4:15.
10-4. Gotcha.
So 2007, we moved up to, what do you say, 2006?
2030.
2036.
30. We're close. 35.36. Yeah. What's the difference?
Right. Okay. So if we got 2007 minus 20, just to make it 36. We're at, that's 29 points from high to low. So a few points, off, but pretty close. Just basically just barely, and notice how when it hit that, what it do? Popped and fell right back.
Actually, Friday, you were spot on, dude.
Yeah, I mean, it's day after day. And I'm not using like historical volatility. So I'm not looking at how far the market did move in previous days. I'm literally just looking at how far did it move not how far did it move. I'm not looking at how far it moved at all. I'm looking at like the options. So if I go to the options, you can pull out the implied volatility. It's a number you can extract from an option price. Sort of a simple way to put it is if you looked at a straddle, I don't know if you know what a straddle is, but if you buy a call and buy a put like at the money, okay?
Okay. Yeah.
And let's say that the call, I mean, it's right at the money, so there's no intrinsic value on either one, okay? And
Are
so
you
let's say
talking about the ES?
it doesn't matter. It doesn't matter if it's Amazon, ES, or Google or anything else. They all work the same. Okay. So if you bought a at the money straddle, and let's just say the market was trading at 2,000 to make it really easy. Okay. And let's say it cost $40, okay, for the call, and it cost $40 for the put. Okay. That's pure premium. That's $80. That premium essentially is what the market is saying. That combined premium is what the market is saying as to how far it will move. So that's basically saying between now and, say, expiration Friday, okay, then it's looking for a 80-point move up or an 80-point move down or 40 down to 40 up. They're basically priced, in the market's opinion, to where if you bought that, you would break even. Because you'd lose $40 if it went up 80 points on the lower one, but you'd make $40 on the upper one. Okay?
Right.
So if the pricing is built in, then if you combine the whole price together, if it moved up 80 points, you'd break even. If it moved down 80 points, you'd break even. Anything less, you'd lose money. And so that's how option pricing models are built. They're built to be break even based on the expectation of movement, so neither side has the edge. Okay?
So let me ask you this. If I were to go over to the trade, to try to figure out nightly, to figure out what the implied volatility will be for the ES minis, what's your best suggestion?
Hop on the scanner and do it. So, I mean, I'm giving you, that's like a shortcut method. It's not the most accurate method that I just gave you, but I mean, that's the easiest way I can explain implied volatility without giving out, calculus.
Right.
So, like, what we do is we literally, like, right here inside the scanner over on the website, you can get access to it. You can check it out for free. Okay. But one of the pages is a deviation page. If you click on that deviation page, it actually takes all the option pricing on all the markets simultaneously, pulls out the implied volatility, factors that into a half deviation, 0.7 deviation, 1 deviation, 2 deviation, 3 deviation move. And it tells you what the exact prices would be, and it gives you the high to low as well. So like 25.5 was the high to low, but it still says, hey, if it moves up a full deviation from settlement, that'd be 2042.5. So we're just now surpassing 1 deviation, but we could go up a little bit further and hit 2042.5. What do you got?
I'm with you. Okay. I'm looking for it on the home page of, do I have to log in, or is it right here on the home page without login in?
On TFNN? Go there to the left side of the page where it has a little scroll bar with all the stuff listed.
Yep.
And then where you'll see Diagnostic Box Spread Analyzer. It's included as one of the features in the Box Spread Analyzer. It says Diagnostic Box Spread Analyzer along with deviations. Just click right there to hit Learn More, and you can get immediate access. 2 free weeks. And all the deviations come with it.
Can I hold on with you?
Hold on with me. Stay right there.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Join David Dwight as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, welcome on back here to the Diagnostic Trading Hour. We got James from Florida on the line talking about deviation levels. Are you still there, James?
Yeah, I was trying to find it, what you were telling me, but I'm a little slow to the draw to find it on the home page. You said to the left.
Right, so if you go to TFNN.com, and then on the left side, you'll see, it's right there near the top. So right near the top, and you'll see where there's a little menu that goes up and down. It's above the Meet Our Host section.
Oh, Meet Our Host. Okay, I see it, yeah.
So right above that, you can click up and down on the arrows. And just click up.
What am I looking for?
You're looking for Diagnostic Box Spread Analyzer.
All right. Well, it's not working right now for me, but you got to check it yourself because it's not there. But I follow you now. I know where you told me.
I'm showing it on the screen. So if you go back and watch the replay there, you'll be able to see it. It's showing right now on Tiger TV, but it's under Diagnostic Box Spread Analyzer. You just got to click the up and down arrows because you'll see other ones because it's constantly changing. So like it'll start with Steve Rhodes and Andy Hecht and Gold Report and eSignal, and there's a whole bunch. I mean, there's dozens of them on here, but Diagnostic Box Spread Analyzer is the one that you're looking for.
And then go from there to using the just putting in the amounts, whatever I'm looking for.
Yep. Another way to find it is if you go to newsletters and go down to services in the top menu.
Newsletters, yeah, okay, I'm seeing it.
Let's go to services, and then you'll see Diagnostic Box Spread Analyzer right there on the right side.
Okay. Well, we're having a push now. We're at 20.38 1/4.
That's right. Yep. So we're going up towards, and like I said, our target for a 1 deviation move from settlement is 2042.5. So yesterday we had a target at 2014.75. It popped right up on that, pulled back. The day before that we had 1994.25. We went right down to that. The day before that we were at 2016.5. We hit that. So, I mean, it's pretty likely we're going to go ahead and move up and probably hit about 6-7 more points if the trend continues on here. So what I do is I look at two things. I look at a 1 deviation move from high to low to expect sort of chop once I hit that level. And then what I do is, and we had that. Like when we hit the 1 deviation high to low, it was at 2034.75, which is right at the 0.7 deviation level. But we pulled 25 points from the low. And then it hit that, and it bounced off of it. Usually we get chop when we use 1 deviation, but it still likes to break through often and go on to that 1 deviation. And it's doing that right now. So if it does continue on up, then really the most I would expect is right around 2042.5 before it called it a day.
Another 7 points.
Yep. So plenty more room in there.
In your experience, when you've got 2 back-to-back, pretty good points up. Yesterday was, I think, 25, just as a round number. Today, we could be another 20, 25. That's 50, 45, 50 in 2 days. In your experience, will your deviation show any kind of deviation where we might more like hit the middle of the ring or the bottom period? Because it's like, okay, we got to have a little give and take, up and down, stair step.
Oh, well, they'll change. So one day they may be 20, one day they may be 25, one day they may be 15. So, because it's all about the implied volatility. What is the implied volatility telling us for that specific day in advance? So, I mean, today we had 25.5, and sometimes it'll stay the same for a little bit. Let's see, yesterday the deviation was 26.25. So we're actually a little bit lower today than we were yesterday.
Because yesterday was such a high impactful day.
Day before that was 23.5. So we had 23.5 2 days ago. We had 26.25 yesterday. That was in advance. This wasn't after the fact. This was in advance. And then today we had 25.5. So it actually went down a little bit. Even though we had a high impact day yesterday, it actually pulled down about a point.
I want to thank you for your time.
Hey, you bet. Check them out. And if you have any questions, let me know.
Thank you, Darrell.
All right. Hey, y'all have a great day, a great weekend, and I will see you here on the Diagnostic Trading Hour next Tuesday. Or actually, this Thursday. Getting ahead of myself. All right. Y'all have a great day.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. You're watching Tiger TV.